Good afternoon. I have a daily chart on the S&P 500. Today's date 1:23 p.m. 3/28 2016. And this is a daily chart on the S&P 500. So when we started the S&P 500 out, we started and we went straight down. The selling was extreme. So the bear was totally in control. We set up with that double bottom, and on this particular chart, we have the green line, which is a 200. The beige line is a 100-day moving average. And short term, the blue line or aqua color here is a 10-day moving average. And the red line is a 20-day simple moving. So based on this chart right here, we have totally swung the pendulum, meaning that when we got up here, the bear cycle has come out of this market in the short term. The bull is exactly there, and we have come all the way up off of the bottom. There's a 10-day. That green line is 200. Now, see, it's still sloping down. The 100-day simple moving average, which is this beige line, this is where we took the breakout, and it was part of getting above that 100-day. The 20-day crossed above the 100. What we have basically is a 10-day. We have had basically, if you take a look at the S&P, it, it wasn't down anything. I mean, the 500 was zero point 0.1, but the 100 was zero. So basically, that's all they could get out of that today. And so the seller and the bull were not totally in the tape, because the tape today had a lot less volume than what we would normally want to see. So this is the super movement once again on a daily level. So I'll just keep it blowed up for everybody. And this way the screen and nobody is in control. The bull, though, is getting uh, tired, and we're going to go back down. So, as I have said that, I'm going to conclude that the S&P 500 daily chart is right here, and it's holding the current support level. However, this was the level that we had this reversal 1 day, 2 days, and the third day we still ended down on these other prior days. They tried to, hold it here at the 10-day simple moving average. The other thing about the S&P, that since the bear was in control on this weekly chart, which they were, and we called this move, okay? And we got our great bear run as we had called for. And these were some of the lows that were down here. And basically, when we got above that 10-week moving average here, the blue line, the 20-week, which is the red line, still continues to go down at a slant. Now, the bull case for this short-term volatility is a couple of things, and I'm going to show you right now. Just right here in itself, the white line is a 50-week moving average at 2030. The 100-week moving average, which is this beige line right there, that's at exactly 2018. As far as the 20-week down here at 1990, and then this is a weekly moving average. We don't even need to worry about that. That was 1813. So basically, the bull has a reason to try to go higher. What would that reason be? Well, it needs to be volume weighted move. We also, in the price action, is that this trend line that I drew, we're still right below it. And that 50-week moving average hit it today. And I just want everyone to see the close on the S&P was 2037. So down here at that 50-week is 2030. So it's 7 points above there. So everyone knows. once again, I can tell you though that there is another reversal. And everybody who knows this and everybody from around the world that loves to go to stock market funding, they enjoy seeing the fact that we know what we're doing. And it's all about patience. So, same thing that happened here on the bear move, it took patience to get a bottom, and volatility right now is low. And another thing that I would like to tell people is that the fear indicator called the VIX is at all-time lows again. We are going to have another sell down, and right now we have that support right there, narrow range on a weekly. Now, having said that, here's what we're going to do too as well. Right. Here we go. 1:32 p.m. Pacific Standard Time, 3/28, 2016. And for all of our traders around the world, we are going to show what everyone needs. And this is that long run that we had since March of 2009. I would like to tell you all that there are weekly moving monthly moving averages. The green line is a 10-month moving average, and that price, short term, that we're going to have support, that price level, which we're very close to it. This is, so I'm going to put it on here just to show you that today's date, um, which will be starting here very quickly, we do have that at 2017. That 10-week. The red line up here is resistance. And that red line is a 20-week moving average at 20.32. One of the things that I would like to tell everyone, we closed at 2037 on the S&P on lighter volume and less commitment to buy equities. Now, this is way that we started out the year with a big short across the board. And so what I am going to show is the bottom of this, these prior bars right here, that's at support level. And you can clearly see that big wick. That was where the buyers came in at the critical 1810 neckline on the monthly S&P 500. I showed the 100 or the weekly, and you can see where this S&P, if it doesn't get above 2050, then we will be buying some bear funds to trade intraday like we did when we went clear down here. And this is how the year started. It's almost the first quarterly. Yeah, January, February, March 28th today, and we're going to be closing out the month. And this is what it looks like. And I can tell you one thing, if we start to slip below the 10-month and the 20-month, it's going to get ugly. And what do I mean by that statement? Well, if any of you have ever learned about moving averages the way that we do it, we calculate that the 10-month is declining and that the 20-month is right up here where this monthly S&P is. And the difference between the 20-month and the 20 weekly, when something like this is still going down in value, and I'm going to draw a trend line right there for you right now. And bingo, there it is. Um, this is what the market is going to have to deal with on the S&P monthly. And we're giving you the heads up right now because we are going to go lower and that the commitment from the buyer is not there. We had a lot of people that will short these markets. We had big hedge fund managers short these markets. And right now, when it stopped working down here at 1810, we went parabolically up. And once again, what has happened is the following. We have taken the short sellers, the big money short sellers, out of the tape. And I'm just letting you know, going from that bottom wick straight up through here, this side of the market is where we're above everything. If we drop below this trend line and we get below, if we get on the other side here of this diagonal line of the last couple of months, there's going to be a lot of trouble, and the bear would certainly be in control of the S&P 500. We've gone both distance. Volatility is great. You make a lot of money. You make money this way. You make money that way. You make money sideways. You make money by being disciplined.